Hi, people. Thank you for stopping by at Building Wealth with Rajeev. SaaS, software as a service investment, has been very popular of late and has generated some great returns for the investors. So I discussed this with Francis, who has been studying SaaS businesses for a couple of years and has developed a framework of his own. Francis and we discussed about why SaaS businesses are so popular, how to assess SaaS businesses as an investment, and then we go into specifics like companies like Crowdstrike, Snowflake, Palantir, whether they make right investments. Hopefully you like the content. If you like it, please share with your friends and also follow the channel. Why should investors be investing in SaaS companies? What's so special about them?
With a SaaS company, you have a situation whereby once a company decides to employ a particular SaaS platform, it's installed in such a way that it scales across the whole company. It scales across the whole company. A company has to pay for a contract or subscription that's over a 1-year lifetime, right? And so you can't necessarily just back out of your subscription or contract because there will be implications for that, right? And so what that did for investors was they had a high level of visibility as to the future revenues or the future expected cash flows of this company, as opposed to your past, maybe consumer-led types of businesses, where in the past you had businesses whereby the business wasn't as stable. Commodities, for example, right? There was always the oil, the boom, and then the shock, right? You had those, or consumers. Consumers had different tastes. There was a particular trend that was trending for a particular period, and then eventually consumers necessarily just stopped, were not interested. I mean, we saw this with COVID, right? A huge part of the consumer types of businesses, and this is not saying consumer businesses are bad or anything, like your Pelotons, nothing's bad about them. But what you saw is they go through these types of periods, whereby there's a period where there's a huge inflection. Meanwhile, for other companies like SaaS platforms, like the security platform, your data analytics platforms, there's a stability to how these companies are growing, right? And so that's one of the biggest, in my own opinion, one of the biggest benefits of the SaaS model is really just the recurring nature, the stability, the high margin nature of the business, right? Whereby I as a programmer, I was a programmer, I could literally just program and make a code on my computer and sell that to thousands of people from my bedroom, right? I don't have to worry about fixed expenditures on equipment, plant, property, equipment. I mean, there's those types of expenses, obviously, SaaS businesses do need those, but there's a very high level of scalability and improvement in margins you don't have to spend. So there's all these different benefits of the SaaS business model that makes it a lot more superior. And generally, that's why you have higher multiples are generally awarded to SaaS businesses as opposed to any other traditional, any other part of the business of the stock market.
So I think, Francis, that's amazing to know that why SaaS makes for such a compelling investment. How do you analyze SaaS companies? What matrices you look at while analyzing the companies?
Eventually, I think over the last 2 years or so, I think I've really come to a framework that I think generally works well for investing in SaaS. And I think I'll bucket it into maybe 4 major buckets, if you want to call it. So first of all is the financials of the company. I mean, you could never go away from that. So we could, if you want, we could touch on each of these 4 buckets much later, but on a very high level, it's like the financials.
Let's be high level. Let's be high level in the
Sure.
financials. What do you look at? 1 or 2 key measures?
Absolutely. So financials is just the revenue growth. Obviously, I invest in very rapidly growing companies. And then the second piece is really the margin profile. So what's the gross margins and the operating margins? So that's financials on a level to decide an investment thesis. The second piece that sometimes is actually more important that may be beneficial for someone who's been in tech is more about the product and the competitive advantage, the product moat and competitive advantage of the company, actually. So, for example, the moats or the advantage, what advantage does this company have relative to their competitor in terms of how core, how essential is this product to an enterprise? What are the switching costs of these products? The network effects, how much does this product actually scale in an organization? What are the go-to-market strategy or the go-to-market approach for these companies? How do they actually get their products out to the market and sell, as well as the TAM, right? Like how fast and how rapidly growing is the TAM for that company, you know?
TAM is total addressable market.
Correct. Yes, that's correct. And so that fits into that competitive advantage. So looking through those features to determine, because at the end of the day, quite frankly, the product moat, the competitive advantage should eventually lead to the financials on the other side, right? Like, because eventually, if a company is doing things right, the right product, the right sales team, the right competitive advantages they have with your product eventually leads to the financials, right? And then I have a third and fourth bucket, which is just, you could call them your non-quantifiable features. So this would be like the management team. How much do they own into the company? Like, you know, what's the technical capability of the founder or the owner? What's the culture? What's the product velocity, which is something that's quite important for SaaS companies? How fast and quick are they innovative to actually release new products onto the markets? And then I also, some other and this is why I call them non-quantifiable features, are things like your valuation, like what price is the stock selling for, you know? I also look at price and volume. So like how is this a company? Because sometimes the price, there's always some truth in the stock price. I fundamentally believe there's truth in price, where like a company, for example, Snowflake has done really well amidst this pullback right now. Why? Well, because of the fundamentals, right? Meanwhile, some companies where you might not call them overvalued, though, right, have actually cheaper companies and the cheaper valuations have actually done quite worse there. But anyways, we could come back to that later on. And then the last thing I also kind of look for, and this has helped me in my process, is institutional support. So there are some special technology venture capital funds that I look out for, that they have a very good track record in terms of picking the best technology stocks. They have a very good track record historically. And generally, when those guys have their foot into specific stocks, it's generally a signal that there's something worth looking for, you know? So in general, anyways, the non-quantifiable features for me are just management team, culture, product velocity, price and volume, valuation, and the institutional support. But we could go through each of these if you like.
No, so I think let's talk about a company, for example. Let's take an example. Which is the company right now which comes up to these criteria?
Yes, I mean, there's so many companies, but maybe let's use Crowdstrike. Crowdstrike is one that many people know. It's widely, I mean, I'd imagine many people in the software world and even non-software people know about Crowdstrike, right? So Crowdstrike generally is a company that you would call them, they're a cybersecurity company that provides a lot of, they call it endpoint protection programs, security orchestration, endpoint management, detection and response. So essentially what Crowdstrike simply, in a very, very simple language, is devices and platforms that enterprises and corporations own. You install their platforms on your device to protect your device against fraud, against malicious software, you know, phishing, malware, all kinds of attacks, right? So that's just what Crowdstrike does in general for anyone who wants to know device security. So in terms of how they will fit into all of my process bucket would be, first of all, the financials, right? We know ever since IPO, I think Crowdstrike they've been rapidly growing, right? We know that. And so personally for me, I generally am looking for companies growing higher than about 30 to 40% in general, or preferably over 40% generally. And the reason why I look for those types of companies is generally when a company is rapidly growing, it just means there's a product market fit in the sense of the market wants this product, right? The company has a product that's a good product that has a huge value proposition to the market, and there's demand, right, for that product. And so that's why everyone calls themselves high growth investors, but I think that's one of the important reasons we need to actually differentiate why are we high growth investors, right? Because of it means there's a product market fit and there's demand. So that's growth. We know CrowdStrike has compounded probably close to over 60 to about 70% growth rates. Like this is if you add up all of their growth rates over the last few years. So they're phenomenal for that. In terms of margin profile that I talked about early on, they've generally had about a gross margins. They came into the market and IPO at about 60% gross margins, but that margins actually accelerated over. So I believe currently right now, I believe they have maybe about 70% or so gross margins in general, right? So the gross margins have improved, so as well as the operating margins have improved, right? So as an IPO, they had maybe about 30 to 40% negative gross margin, operating margins. So that's your EBITDA margins, and that has improved quite steadily. Even to right now, I believe they have about an 11% operating bottom line margins. They have free cash flows that are over 30%, and they've actually consistently kept that for quite a long time, you know. So
in cybersecurity, which is your favorite play? Is it CrowdStrike, or is it some other company?
I would say there's so many companies, but I mean, right now, if you want to find a company that's firing on all cylinders, or meets the whole bucket, the whole gamut of valuation, culture, team, growth, margins, everything, it's CrowdStrike right now would be a high conviction. However, I think cybersecurity is large. It's big. There's so many players, like people don't even know how many players there are, how fragmented of an industry it is, quite frankly. And I think with the SentinelOne, which is a very interesting company that we could talk about if you're interested. There's companies like Palo Alto Networks, there's Fortinet, there's Zscaler, there's Okta, there's Cloudflare, right? So there's different plays, there's different gamuts across the whole cybersecurity landscape, depending on what part of the enterprise you're dealing with, you know. But right now, I think CrowdStrike is one where, I mean, it's still a great company. In terms of one that I think has the potential to grow more rapidly over the next few years, I feel like companies like SentinelOne have that potential for huge acceleration.
Okay, all right. And let's talk about a few other companies. Let's talk about Snowflake. How are you looking at Snowflake, and what is the competitive advantage Snowflake has?
Absolutely. So Snowflake is actually a pretty interesting story because where I work, so the company, the bank where I work, the financial institution where I work, we're actually in the process of installing a Snowflake platform to actually use within our financial institution back there. And so we didn't actually, I wasn't there to see the finalization of it because with Snowflakes, it takes a huge amount of time to actually get it installed and get it up and running for you to start actually running your analysis and queries, right? So I actually do have a little bit of background just in terms of the process we took to actually analyze the platform. But in general, I mean, if we're looking at what is Snowflake, and maybe just for your audience to be aware of, like, let's step back and say what's Snowflake in general. I think it's a cloud agnostic data warehouse company, right, for centralizing all the data within a company. So they call it the data cloud. So what that just means is it's on the cloud, it's cloud native, right? It's built for the cloud in and of itself. And then the second piece has to be it's a data warehouse. So think about it, your warehouse, like a storage warehouse. But in this case, it's a warehouse actually for storage of data, actually, And so with Snowflake, what you have is a data cloud, a data warehouse company that enables their customers to consolidate all the data into like this single source of truth, which once you have this warehouse that you centralize all your data points in it, then you could actually use it to drive and build maybe more applications on it. You could use it to drive machine learning and data science, which then help to drive business insights and business decision making.
How do you look at Snowflake as a stock investment? I mean, in terms of, let's say if I were to buy, if you were to buy, what do you think it's a? I think it's one of the most expensive stocks, I guess.
It is one of the most expensive. So actually, since 2018, I think in Q1 2018 of Snowflake's up until the most recent quarter, this company has grown triple digits growth consistently straight. So what that means is growth over 100%, right? In the early days, I think for the first 2 years of the company, they were growing close to 200%. And then they've grown consistently over 100%. You could technically say they don't have, and I don't know about the very early days of the platform, obviously, but from what we have on their filings, for the last 3 years or so, consistently every quarter, they've grown over 100%. And even their next quarter, the guide they gave a guide for 96% growth rate. Generally, we know if that's the guide, they're generally going to come in at above another 100% growth rate again, right? So think about that. And obviously, it goes back to some of those features we talked about, right? The company is a leader in a large TAM. So there's no surprise why it's growing so rapidly, right? Because there's demand, there's that product market fit. It's a first leader advantage. So that's one. So I just want to, I will put the pieces together to come up to the valuation, right? Because I think you need to put those pieces together to come up with how do you value such a company. So you have the financials, you have the operating margins. I think you also have a company which we talked about earlier. The gross margins for Snowflake, maybe about 2 years ago, was in the low 50s, I think about 56%. And the reason why that margin is actually quite low is because of the fact that they actually they are reliant on the big three cloud platforms, GCP, Azure, and AWS, right? So that's why their margins are high, but they've made a lot of performance improvement to their platforms. Now I believe we have close to about 64% gross margins, which is fairly, it's still fairly low. It's getting up there to the 70s, but it's that gross margins has grown from like the low 50s over to approaching 70s now. The EBITDA, the operating losses have actually shrunk. I think when they came to IPO 4 quarters ago, it was like negative 100%. It's reduced from negative 100% to 90 to 74. And I believe as that last quarter, it was about maybe negative 47%, roughly thereabouts. But obviously, if you remove the stock-based compensation, they're actually positive on a non-GAAP basis. So the margins have improved. You could see those margins improvement. The customer growth is constantly growing. Last 3 quarters, I think it was 80%, 67%, and most recently 52% customer growth. And this is the magic trick, the dollar-based net retention, which is just a calculation of a metric for the same customers that you had from the previous year. If you put them into this year, how much more are they spending? Over 100%. And Snowflake has one of the highest on the market. In fact, their most recent quarter was a record high that we've ever seen, 173, I believe. Yeah, it was 173% dollar-based. Like, we've never seen that ever. It just means the customers are spending a lot more on the platform. And what that does is obviously that helps with the revenue growth, right? Because customers are spending more. So anyways, so if we put all of these growths together and we think about the future of where the company is going, and one last thing to take note of is the CEO, right? Frank Slootman. Like, we all know about his reputation. We know all the companies, and we know about how he brought ServiceNow public, right? We know about the companies that he scaled, and he's just had a flawless execution of a career. So, and so he's an exceptional leader that obviously I think you actually have to take into context into the company. And I think when you put that all together, it's hard to come up with a company that's going to be cheap, right? It's going to be extremely difficult for you to come up with a company that's cheap. And so that's why many people are surprised. It's extremely highly valued because so many things are going right. Growth, profile, competitive advantage, tab, everything just seems to be going so well. And even that's why, amidst the growth correction that we've had recently, they've nothing, like the stock has really budged, and that tells you that. And I talked about price and volume that I look out for. But it's funny because nobody's selling, even though it's overvalued. The owners of the stock are like, this company is so important to us, we can't sell. I'm not going to sell my stock. Huge. There's a lot of evidence to suggest that even if we don't get 100% growth for the next couple of years, the growth is always going to be on the high side. You could bank on that because the market is just growing rapidly. You're the leader within that market. Your advantage is so much higher than your competitors, you know. And so yes, I think that's what's happening. But personally, I don't own it, and quite frankly, I'm like, why shouldn't I own it? And I think in my own valuation, I also have that worry too, that of obviously, I owned them for a bit. I think I owned them once and I sold them for a bit. But I'm personally looking at them at like, I have about a 90 billion valuation, 80% valuation-ish, because I think right now it's over 100 or something, which would get my EV to sales multiple at like maybe low 40s or something, somewhere about that. And I think for me personally, that would be a point where I'll be super happy to pick up shares, obviously. But sometimes, I mean, quite frankly, I'm like, why don't I own it, quite frankly? But there's always that balance, you know, like, you know, valuation versus what a company's worth. You know?
Personally, you are not comfortable with this high valuation, but at the same time, you're not surprised why people are buying it.
Correct.
I think last question here, Francis, is if you draw a little bit of comparison between Snowflake and Palantir. I know they solve different problems, but you know, which one is, you know, kind of you look is more durability and more you know, attractive opportunity?
Yeah, it's a good question. I mean, so it's funny, I own Palantir, but I don't know what Snowflake. And I mean, quite frankly, I mean, I think if the price hits my valuation point or just there about the 90 billion valuation related, I would actually pick up shares. So I don't know, but I've owned Palantir. Maybe let's step back. What's the difference between both platforms? So we've talked about the Snowflake is primarily more serving as a database or a data warehouse storage related platform where you could do compute. Meanwhile, Palantir, they're more of a platform whereby they're more of an analytical platform. They're more of a platform where you actually do more analysis on. So if my company needed to make decisions, I think I used an analogy a while ago. I used an analogy of a river. Think about a river and installing a tap, or like if you like putting a pipe through a tap into the water to actually drink water, or water for a house or whatever. Think of Snowflake as the foundation, because that's what Snowflake, it's a foundation for all the data in the company, right? All the data in the company comes to this ocean. Then Palantir is more of like, think about your pipe that you use to tap and take water to, for example, in a house, you might need water in your kitchen, for example, you might need water in your bathroom, or or you might need water in different spaces, right? To wash your hands, right? So that's the difference. So in terms of Palantir is not a storage platform. I mean, they do have some components of that, but they're not a storage platform itself. They're more of an analytical platform whereby Palantir comes into your organization. They help you to migrate and centralize all your data points within your company, bring that all together, and then help you drive and build models, machine learning models to drive and solve actual business problem. Right now, Snowflake doesn't help you with developing the machine learning. Like you still need your data scientists and developers, but Palantir actually has those. So sometimes they use their forward deployed engineers or whatever, if it's a consulting gig, or they have different ways in which the automated parts of their platforms where they're actually able to drive and make analysis to solve actual business problems, healthcare problems, different types of problems. So yes, so that's one. So that's a very high level differentiation. I mean, we could go into the differences, but in terms of the durability of growth, unfortunately, I think, and I mean, this is coming from a Palantir bull. I mean, I'm a Palantir bull. I talk about the stock a lot, but it's very hard for you to, and it's hard for you to displace Palantir, but it's hard when a company is your foundation, right? When they're like that water that brings in everything, and they give you this flexibility to store and to take out what you need, right? It's very hard. And obviously we know Snowflake is a clear leader within the market where they're at. Palantir, they're actually a leader within where they are. Well, I guess the challenge with Palantir's piece is we can't quantify it as much in terms of the lead, because there are other platforms on the market too. Like there's a smaller company called Data Robot. There are other companies where you could use to build analytical platforms. Or for example, even my company, for example, if you have a group of developers, data engineers, and data scientists, you don't need a Palantir software. You could easily use your own platform on Snowflake to actually drive your analysis and data science. Meanwhile, so for example, your average company could do without Palantir, but your average company can't do without Snowflake, right? Because do you see that difference? So anyways, that's why Snowflake is valued significantly higher over Palantir, But in my own opinion, I think both companies are great for the future, and I think they're both great. And right now, I own Palantir, obviously, because the valuation is slightly better, obviously. But I see there being a need in the future for custom-based analytical solutions, whereby companies don't necessarily have all the money to hire a scientist and engineer. They could easily just bring in a Palantir or install Palantir. So Palantir has some pre-built models, put it into your companies, and actually use that to run analysis, centralize your data, and drive business decisions as well too. So that's just, those are some of the differences. Those are some of the reasons why. And obviously, Palantir's growth isn't as much, right? Like the growth isn't as quite as much. The margin improvement isn't as much, but they have a phenomenal product. There's a need for Palantir, and the durability of the growth for Palantir is also there. But there's a reason why Snowflake gets where it is over Palantir.